The first Friday of every month is a date that traders, investors, and economists around the world circle on their calendars. It's not just another day, it's NFP Friday, when the US non-farm payrolls report is released and the financial world holds its breath. If you're serious about trading, this is the moment you simply can't afford to miss. The anticipation builds all week, and as the clock ticks closer, the tension on trading floors is palpable. Phones ring, screens flicker, and everyone is waiting for that one number that could send shockwaves through global markets. This Friday at exactly 12:30 p.m. GMT, the US non-farm payrolls report will hit the wires. In those first few seconds, billions of dollars can change hands as traders react to the headline numbers. The NFP isn't just a report, it's a catalyst that can move currencies, stocks, bonds, and commodities in a matter of moments. Whether you're a seasoned pro or just starting out, understanding what's at stake is crucial. For dollar traders, this is the headline event of the month. The NFP has a reputation for sparking wild volatility, sharp moves, sudden reversals, and for those prepared, there are big opportunities. The market can swing dramatically in either direction, and fortunes can be made or lost in the blink of an eye. It's a test of nerves, skill, and preparation. If you thrive on action, this is your Super Bowl. But it's not just US traders who care. The NFP is watched by market participants from London to Tokyo, from hedge funds to central banks. Its impact ripples across the globe, affecting everything from the euro to emerging market currencies, from gold to oil. The sheer scale of its influence is unmatched by almost any other economic release. So, what are the experts expecting this time? Economists are predicting a gain of just 110,000 new jobs, noticeably lower than June's 147,000. That's a significant slowdown. And it's got everyone asking, is the US labor market losing steam, or is this just a blip? Every forecast, every whisper, every leak is dissected for clues. Wages are also in focus. The consensus is for a modest 0.2% increase. That might not sound like much, but wage growth is a key signal for inflation and consumer spending. If wages surprise to the upside, it could reignite fears of inflation and force the Federal Reserve to rethink its plans. And what about unemployment? The rate is expected to tick up to 4.2%. That's a small move, but in the world of economics, even 0.1% can have big implications. Rising unemployment could signal trouble ahead for the broader economy, and markets will be watching closely for any signs of weakness. All of this points to a US jobs engine that might be cooling off. But is it really? Or are we just seeing a temporary slowdown after months of strong growth? The NFP is notorious for surprises, and the market loves nothing more than to catch traders off guard. That's why preparation is everything. Why does the NFP matter so much? It's simple. Jobs drive the economy. When more people are working, they spend more, businesses grow, and confidence rises. But there's another reason traders obsess over this report, the Federal Reserve. The Fed watches the NFP closely to decide whether to raise or lower interest rates. A strong report could mean higher rates, while a weak one could lead to cuts. That's why every number, every revision, every detail is scrutinized. If the jobs number comes in strong, the US dollar often surges. Investors pile into the greenback, betting that the Fed will keep rates high or even hike further. That can send shockwaves through currency markets, pushing the dollar higher against everything from the euro to the yen. But if the report disappoints, if job growth stalls or wages miss expectations, watch for the dollar to dive. In those moments, gold often pops as investors seek safety and risk assets can get a boost. The reaction can be swift and brutal, catching the unprepared off guard. The history of NFP is filled with surprises. Sometimes the headline number beats expectations, but the details tell a different story. Other times, a miss on jobs is offset by strong wage growth or a drop in unemployment. That's why it's never as simple as just trading the headline. Smart traders know to dig deeper. They look beyond the headline to the revisions, the participation rate, and the underlying trends. Sometimes the initial market reaction is completely reversed within minutes as the details emerge. It's a game of speed, but also of patience and analysis. Just last month, the NFP smashed forecasts. The dollar spiked higher, traders cheered, but within hours, the move faded as the market digested the full report. It's a classic example of why you can't just react. You have to think, analyze, and adapt. The path after NFP is rarely a straight line. Markets can whipsaw, reversing direction multiple times as new information comes to light. It's a roller coaster, and only those with a plan and discipline come out ahead. So how do you trade NFP smartly? It starts with preparation. Know the expectations, understand the risks, and have a plan for different scenarios. Don't get caught up in the hype. Focus on your strategy and stick to your rules. One of the biggest mistakes traders make is chasing the first move. The initial reaction can be a head fake, luring in the unwary before reversing sharply. Patience is your friend. Wait for the dust to settle before making your move. Pay close attention to the details. Wages, participation rate, and revisions can all change the story. Sometimes a weak headline is offset by strong underlying data, or vice versa. The best traders are those who can read between the lines and spot the real trends. Risk management is key. Set your levels in advance, use alerts to stay on top of fast-moving markets, and never risk more than you can afford to lose. The NFP can be a gold mine, but it can also be a minefield. Remember, NFP Friday isn't just another date on the calendar. It's a market-moving moment that can define your month or even your year. The stakes are high, but so are the rewards for those who are prepared. Stay sharp, stay informed, and always trade your plan. Don't let emotions take over. Discipline and preparation are your best allies. For more tips, in-depth analysis, and real-time updates on NFP and other market-moving events, follow me at dhandathegreat.com. I'll help you navigate the volatility and find the opportunities others miss. Let's master the markets together, one NFP Friday at a time. Good luck, and may your trades be profitable.